All right. How's it going, everybody? Hey, what's up, guys? How's everyone doing? Beautiful. All right. So, welcome, right? Session number two. We had one on Tuesday, right? Went pretty well. Kind of same goal here as on Tuesday, right? Go through kind of your guys' questions at the beginning. Um, we'll hopefully use that, right, as like some inspiration to either go into topics in more detail or whatever it might be. But that's sort of our objective here. I've had a few people email me some questions as well, which we'll hit on here at the very end. But yeah, happy to open up the floor to everybody. And yeah, let's get after it. So, who's got the first question? Who wants to break the ice? Let's have a good one. Yeah, no worries, guys. This is recorded, so if you don't watch it all or you don't have the energy, please don't worry about it. Yeah, Tony. So the 3 for 3 system. The 3 for 3 system is just my pre-market prep system. It's the three things that I'm looking for or care about, right, on the daily time frame. So one is what was yesterday's like price action, right? So what was the candle? Two, what's the volume, right? Yesterday's volume. And then three, what's today's price action telling me? So I want all three of those things to all tell me the same story. And when they do, I have a lot more confidence that I'm going to get, follow through. So if I have, 3 out of 3 things all telling me the same narrative, then I feel more confident that I'm going to have trending price action. Whereas if I have 1 out of 3 things telling me a consistent story, then I know I'm probably likely to get a bit more inconsistent price action. Yeah, some of the stuff in the hub library is giving me some weird errors. Well, we will work on it, or we'll get that fixed. Uh, let's please keep this though on topic, right? I don't want this to be a tech support call. This here is supposed to be a trading support, right? So let's try to please keep it to trading questions, things that can all help us get better. Yeah, so the candles, if we zoom in here, I use what's called volume candles. So if you go into your settings, right, got bars, candles, hollow candles, and volume candles. Candles is traditionally how things look, but honestly, just I don't know, would have been maybe a year ago now. Had a week where I was just doing a lot of back testing and a lot of looking back at action and used volume candles for that just to help me spot some trends a little bit easier. And I've just liked it ever since. I don't think it actually gives me an advantage technically, but I just like how it splits up price action. Any other questions here? What else we got? Try stack up a couple questions here. Nothing trading wise, guys, is off topic. Yeah. So how do I ID a confirmation candle? And then how do I invalidate a confirmation candle? So a confirmation candle for me is based on two factors. So it's about having a strong candlestick shape and it's about having a strong volume profile. So what I'm looking for here, right, like philosophically, is that if bulls are strong, I should see lots of them. If bears are strong, I should see lots of them. And then I'm using the shape of the candle to determine the strength basically of that move, and then the volume of the candle to basically create context of if that move is actually as strong as it's implying. So confirmation occurs once a setup has been triggered, right? It can often be that same candle, right? It can often be a couple of candles later, whatever it might be. So if I'm looking at confirmation, I'm looking for increasing outlier volume and a strong candle shape, right? So this circumstance here, right? Pretty good looking candle, increasing outlier volume. Maybe you could argue about the wick, but that's telling me a consistent story that there's downside pressure. Same thing here on this previous candle at 944. It's indicating to me that there's continuous downside pressure. Bears were in control for the entirety of the move. There's more volume than the previous, right? Previous couple candles. And so this looks like outlier strength and gives me confirmation. The important element to note here, though, right, is that we have to do these things in order. So it's making sure that we have a setup that triggers first, and then we use the confirmation standard to basically indicate if that setup is valid or not. So if we're like picking and choosing scenarios, right, where we're just looking for confirmation bars, we're just going to get a lot of false signals. So it's important we get that order of operations correct. From there, the way that we invalidate confirmation is in two ways. So, if for us, right, price action and volume are the two things that give us confirmation, invalidating either or both of those scenarios kind of takes you out of the game, right? So, for us, right, invalidating confirmation would be a close above your confirmation high or low, depending on which direction you're going, right? Or if you get volume that's larger than your confirmation candle volume and in the opposite direction, right? So if we were looking at a bearish confirmation and this next candle maybe closed only halfway up, but it was this 1046 volume, then that would be failed bearish confirmation, right? Or it would be invalidated. Confirmation only occurs when the candle closes. So once the candle closes right on this 2 min time frame at let's say 946, that's when I can say I have confirmation or not. At 945, when I'm waiting for it to tick over, I still can't say I have confirmation. So setup occurs in between those time frames. Confirmation occurs once the time frame closes, and then that standard is consistent, increasing outlier volume and strong candle shape. Does that make sense? So what should a complete noob start with to get into trading? I think with trading, the most important thing is just mindset and understanding what actually maybe the reality of trading is. So getting really comfortable with being a good loser, learning how to control that psychology, like being accountable to yourself. I think these are the things that in hindsight, like I wish I took more serious sooner. Besides that, it's just about being consistent, right? And being deliberate in how you approach and try to improve. Doesn't necessarily matter what you start with, but it more matters the intention you start that process with. So if you choose to trade one asset class or a strategy or an indicator or whatever it might be, to study those decisions, track them, learn from them, right? Practice, study, okay, what could I do differently? And use that to shape your learning curve. I think trading, as much of it is a technical game and something that's like, yes, there is a formula. The formula only works if you can control yourself. And so mastering that and getting comfortable and confident in that. I mean, it's a lifelong pursuit, but it's one of those things I think you want to start sooner rather than later. I appreciate that, Shirley. If you have any questions I can help you with here today, let me know. So you mentioned that I'm looking for my exit signal. Can you elaborate on this a bit? Every time I'm in a trade, my adrenaline is rushing, and I often panic close. I think that this is something that a lot of people struggle with. Um, yeah, it's something that we should. That's actually a good thing to build off of with that confirmation, right? So we just talked about how with confirmation, right? Confirmation occurs when that candle closes. So what that fundamentally means, right, is that I don't have a decision to make until that candle closes. So that means that when I'm in a trade or I'm in a winning position, all I'm trying to do is replicate the skills that I'm already practicing, right? So I'm doing a lot of the same stuff in repetition. So if I'm waiting for confirmation to close to indicate if my trade is strong, why not just treat my next candle or the candle that I'm in as if it's a confirmation, right? If it gives me a strong candle shape and it gives me a strong volume profile and my P&L is green, like what should I be afraid of theoretically, right? So it's just basically trying to like repeat those skills and compounding them and yeah, basically going from there, right? So you can wait for a candle to close on confirmation before you look to make an entry decision and to set up your entry. Well, you can do the very same thing on your exit, right? And then if you're doubting and you feel like you have that panic and adrenaline, that's fine, right? I think every trader gets that sensation at some point in a move, but it's just delaying your desire to make a decision or using that as a trigger point to evaluate the actual quality of the price action. So you feel that feeling, right? Sweet. That's something that you can notice. So now you have a choice to make, right? To either snap yourself out of it and to pick something technical to focus on, or, right, you can just panic, close the second the P&L starts to hurt. But what I try to do is I wait for that candle to close. And if that candle, let's say I would treat it as if it was a confirmation for a setup, if it gives me that standard, sweet, I don't need to make a decision. If it's anything less than that, yes, I absolutely need to probably get out of this trade. So when I'm looking for an exit, right, it's once those criteria has been established, I've gotten P&L to kind of move in my direction, and we've gotten some sort of quote unquote confirmation that the move is either stalling out or continuing. Now, this is not something that I'm 100% perfect at, right? I think today specifically, I was very focused on making sure that I was not giving away green wins, especially the second and third trades of the day. Felt very stupid after letting a nice green win turn into a loss. So there's always a balance there in how you manage that. That becomes more the art than science part of trading, but if you're struggling with the psychological element and you're stuck on that, you need to focus on the science element first, make those decisions binary, and then focus on basically trying to out earn your edge. Basically need to create like a solid baseline or a foundation and then build out from there. And for me, the easiest way to do that is to basically replicate skills that you already have. So if we're using confirmation, right, as our entry technique standard, well, if we have, fear or panic or anxiety or whatever it is, I've already got that muscle memory wired up. Why not use it again? How long should you stay in a trade on average? Not doesn't really work like that in my opinion, right? I'm a momentum trader, so I want to stay in a trade as long as I think I have momentum. Once the momentum has expired or has evaporated, I want to get out as fast as possible. If you look, in my YouTube channel, Monkey Zombie, you'll see a bunch of my trade replays, and you'll see a lot of my trades making me thousands of dollars lasting less than 2 minutes. So those aren't like cut up to pick and choose. I'll show you them from start to finish. So, assuming you still use prop firms, do you set daily loss limits or do you manage that on your own? I've had a few losses in a row on my lead account, then got liquidated, missed an entry while reconfiguring my trade copier. So, this is not like it's not one of those things that has like a hard, fast set rule because this is in the category of everyone needs to find ways to protect themselves from themselves. And what works for you might work for me, might not work for me. What works for me might not work for you. And it's important to understand that every person has their own individual limits. Most of the time, right? Especially when you're starting out as a trader, that generally becomes a number where you hit $1,000 down or $1,500 down or $10,000 down, whatever it might be, and it sets you on edge, and you feel like you need to make it all back or whatever it is. That number is probably less than you're likely to admit, and setting a daily loss limit and like locking yourself out of your prop firm can be a very good way to make sure that you have an opportunity to basically be able to trade again tomorrow. Um, Personally, for myself, I don't necessarily deploy a daily loss limit. Um, that's not something that I use in my trading. I'm more trying to walk away when I feel tilted. So there are definitely times you guys have seen in the street where like a trade doesn't necessarily go my way and I'm basically trying to cut it out like as soon as I can, right? So it's for me, I'm listening more to an emotional reaction more than a specific number. The emotional feeling, I think, can be a little bit of a variable where sometimes it can trigger at $1,000, sometimes it can trigger at $3,000. Just really depends. And I'm trying to um, listen to when I get those feelings and to just walk away, kind of regardless of what the number is. Good question so far. What do you guys got? What else is on the docket here? Got like double the people of last time, so amazing. Great yeah, great attendance here. So let's stack up a few more questions. What do we got? This right now is meaningless for our current conversations, right? Um, During the trading day, these are my key levels, right? So if I'm looking for a bullish scenario, I'm looking for breakouts towards 25,000, right? Which is here. If I'm looking for moves past that, right? It's all these subsequent numbers. Same thing to the downside. So it's just when I'm looking at my screen, I can see the key numbers that I'm interested in throughout the session, and I can always figure out what my profit targets need to be, all this kind of stuff. So, what this does for me is it just keeps information visible to me that I don't need to keep memorized in my brain, and it allows me to just see my price action or my thesis a little bit smooth. Have you, Chris, have you tried to trade since then? Or did you trade today? Okay. So I would say drawdown happens to absolutely everybody, right? It's an inevitable part of the game. You've gotten some payouts before. You're sitting in expected value territory already in your prop account. So I think trying to stay consistent with your sizing and not changing the variance is going to be really positive. What I think you want to try to avoid, or at least what I would in my personal circumstance, is if like you have a bad or a good trading day, right? Let's say we have a good trading day and you would have caught those trades and everything. And your half size that you would have done, you're probably feeling this like FOMO and fear. It's like, oh man, like this would have been the one that got me back to where I should have been. And that triggers an equally destructive psychological event potentially. Personally, my belief with risk is you want to be pretty consistent with it as much as possible because that smooths out the variance of your equity curve as much as you can. I've seen it a lot in traders where they seemingly go large for all their losses and then all their wins are only their small size trades. So it ends up kind of creating this scenario where you find the position size that you're probably should be trading in general, but you only find that after you got your ass kicked. And then once you have that win, you get that false dependency, swap over to a larger size, and then you kind of like get stuck in this cycle. So the math starts to break on any trading strategy the more position sizing and risk variance you tolerate. And yeah, like you might survive a little bit longer in these prop accounts. But if you've already gotten a payout and you can prove that you can do that, you've got multiple payouts, you'll probably make more money over 6 months, not changing your position sizing too aggressively, and then arguably increasing your sizing as you get back up to building a larger buffer. So, Michael, I keep getting entries that retrace below my reference price and continue going against me. I get stopped out almost instantly. What can I do to effectively review these mistakes and fix them? So, important to note that some losing trades won't actually be a mistake, right? You can do everything right in a position and still get stopped out, right? You can do absolutely everything right on your trade and it just doesn't work out, right? So needs to be qualifying the version or if it actually is legitimately a mistake or if it is. Tool that I would use here, right? Or let's actually phrase that a little bit differently. Once things have pulled into your reference price, right? There are three outcomes that can happen. So, one, you get stopped out and your idea is wrong, right? Two, your entry goes in your direction and you're green without getting stopped out. Or three, you get stopped out and then the trade reverses and goes in your direction, right? So you get faked out and then the move goes. Those are the three um, outcomes, right, of any possible entry. So you want to figure out of okay, was it the thesis that was incorrect? Was it the entry timing that was incorrect, or was it the stop loss that was incorrect? That would be the starting point. Way you would do that, right, is map out your entries on a chart like this. So let's say you took example for us here today, right? Like we took this. Are we looking at stuff here? So let's say your entry was here and your stop loss was here. In this circumstance, right, you'd say, okay, well, thesis was correct because we got good downside follow through for the rest of the day. But you know what? My entry or my stop loss probably wasn't correct for this idea. Had I got an entry and a stop loss higher up, right, that would probably make a little bit more sense. So I would start first here on the charts, right? From there, let's see if this switches over. Yeah, you guys can see my screen. So from here, you'd go into your DTR hub, you'd click the eye icon, and you'd load up your chart, tab the replay button, set this to maybe like 10x speed, set it so it looks like it would, and then you replay your trade. This is going to show you second by second how price action moved, right? Where your entry would have been, where your stop loss was, right? And you can judge, okay, was my idea correct? Was my idea wrong? Did I close early? Yada, yada, yada. So I think that that would be then, right, the secondary kind of element to look out for. One on the chart, where was my idea correct, basically, or was my idea wrong? Once I've identified, was it my idea? Zoom in on a micro level to study either your stop loss location or your entry location. All right, so I prefer to use my own money to trade in order to avoid the prop rules. What would you say to me to consider using a prop instead? Main perk of using a prop firm is that you are very capped in your actual financial risk for a very limited, like you're giving away a very limited amount of upside. So let's say for like $1,000 in prop eval payments, if you have an edge, you will have more leverage, more upside, and more P&L potential while capping your max risk at that $1,000. With a personal portfolio, you unlock other benefits. There's a lot of tax benefits to trading futures. There's a lot of other stuff that exists there, but your risk of a blow up day is losing your entire portfolio, right? So you can create asymmetric upside for yourself by trading props, and I think it's a really good way to generate, I don't know, 100K, 200K, however much you can milk out of them, honestly, and use that to feed your personal portfolio and basically compound the speed of your wealth accumulation. So, very rarely in life do you get opportunities where you get asymmetric upside with leverage. And I think that's what makes prop firms very, very fascinating. They're not great if you don't have an edge because you're just going to be playing blackjack at the casino. But if you have an edge and you can actually make some cash, yeah, it creates a tremendous amount of upside. So Norman, yeah, well, depends on how you want to do it. Truth be told, Norman, we could set it up as one total account. We could set it up as multiple smaller ones. Um, doesn't really make a difference. Up to you. So I got stopped out, but you were still in, and things looked strong. I jumped back in on the next candle. I believe I was using the aggressive entry technique for a small win. Was I right or just luck? Um, I think in that context, right, Ron, the question to ask yourself, right, is how much time did you spend in drawdown on that position, right? What was your actual net risk on that trade? So if you got in and you had a tight stop loss and you were happy with your dollar risk, right? So you're happy with it, let's say $500 or less. Hypothetically, I can't remember what your max risk is per trade. If you were happy for that and you had like the risk reward ratio to justify it, then mathematically there's nothing there that would indicate bad process or like you're screwing yourself over long term. The question to ask though, right, would be okay, wasn't it an emotional decision where I like chased price and got bailed out after like 5 minutes in drawdown? Or was it like, okay, I saw the little fake out, I got my entry, I spent 5 seconds in drawdown before I was green the whole time, and my actual realized risk on that position was like $120. If it's that second scenario, I probably wouldn't uh beat yourself up about it too much, right? Like that's really effective trading. That's what we're trying to do on our entries. Um, but without knowing the like exact parameters that you were looking at, I can't comment on the mathematical viability of that. Trade copier recommendations. I think the most used trader sync, I think, by the community. I don't know. That might be a question for everyone else here. What else we got here, team? Any other questions? Um, so for me, yeah, let me bring it out. I think we had some other questions about the fib tool here. All right, so let's say that like I maybe use the fib tool a little bit differently than most people, right? So I use this primarily because it saves me a lot of time and it helps me visualize for you guys what my setup is for a position. So I don't use the fib tool for really any specific form of analysis, right? I use the fib tool to be able to visualize for you guys what my thesis is, what my stop loss is going to be, and what my profit target is. The reason I like it is because it's a fixed ratio. So as long as I have these settings enabled, I know that anything in between the green line and the red line, mathematically, I can justify taking that trade, right? It's effectively like 3.5 times larger. So if I'm risking here 40 points, right, that's about 120 points away. So it's always effectively showing me like 3 to 1, we'll call it risk reward ratio. So, okay, I can visualize that my setups are mathematically viable. And then it spits out for me a stop loss price, which I round up or round down to the nearest round number. So, always giving a bigger buffer, right? So, if my stop loss here was 513 and it says 513.75, I would just take 513, right? I wouldn't round this up to 514. I would round it down. So if I'm bullish, I'm rounding this number down. If I'm bearish, I'm rounding this number up. From there, my reference price is going to be approximately 10 points away from my stop loss location. Again, this is just a visual tool, right? So it's that you guys can see what price I am setting my order at. It spits out a specific price that you can type it into your order window, and you have all the information that I'm filling into my position window on the screen. So you then get a audio clue, right, when I'm talking through it, and you get a visual clue of what numbers to type in case I say something stupid or miss or whatever it is, right? So it's kind of like a um, visual system for my audio nonsense that I try to spit out every single day, right? So that's the whole objective of this is it's a tool to visualize um my trading setups better. Same thing with the reference price, right? It's called a reference price for a reason. It's for your reference, right? It's for your viewing so you can see what I'm looking for. It's not anything specific, like or I'm not doing anything crazy. I'm literally just going, where's my stop loss? Okay, entry price within 10 points of my stop loss. Sweet. I can get good risk reward on a small move. And that's really all I'm looking for. Question is why don't I think Michael, you might have emailed this to me. Worth while we're on this topic, you asked, why don't I just like drag and drop the lines on my screen? I think was that you? What draws me to NQ versus ES or YM? So I just like the volatility of NQ. Um, been familiar with like when I worked institutionally, I traded US stocks and we traded a ton of US stocks. So I think there's just a lot of survivorship bias, right? Um, that's why I trade it. I don't need a very big move to make a lot of money, and I can find 60 points, 100 points, heck, 500 points sometimes without necessarily having to like hunt for it too hard, if that makes sense. So I get a good amount of volatility, I get a good amount of range, and it's extremely liquid. It's like the third most traded product in the world, or like in that list. So I can get confidence in execution. A big factor in running a room like this, especially as the goal here is to push more and more people to live and trading like legit my money. You want to make sure that there is enough liquidity in the market that we're trading to not basically manipulate price, right? So if we have like on an average day 250 people watching and each person is buying, one or two contracts, you're buying something that needs a pretty strong order book to be able to execute that type of price action consistently. And NQ offers us that type of resiliency where we're not cannibalizing each other with our executions. You've seen it a lot in small cap land where influencers will load up trades, say that they're in BBYL or whatever, and they'll pump it up because the float is so small. All the buyers were, or all their members will buy it. They'll sell into them, create liquidity, and then when people try to sell out, they generate a tremendous amount of slippage. So yeah, having a very liquid product makes it easy for us to avoid those types of concerns. The main thing, Michael, over why I don't like doing it is it's clunky for one, and it bothers me visually. So when I traded institutionally, we never had our P&L on the screen like you would here. I just think it gets in the way, or I think it becomes conflicting. We had literally like one monitor in the middle of the trading desk that had a cumulative P&L of the entire team. And so it's just something that I'm used to. I don't know. I don't do it on on any of my systems. I guess if it was like everyone was like, "Hey, if you don't do this, we'll we'll come like steal your dog or something." I'm sure we could find a way to do it, but I don't know. It's just not a part of my workflow. Uh, David. So, Michael, do you see anything wrong with using spot 786, one third of the 236 on the February tracement instead of manually drawing the POI point of interest time? I would, Michael. So for me, right, the reference price is always a fixed 10 points. So sometimes the 786 line, right, one third of the 236 might be more than 10 points, right? That would be probably the only thing that I would fight back on. So it might just screw up some of your stuff. So NQ is nearing contract rollover. Does that factor in any of your strategy? This week, no. Uh, yeah, this week, no. Monday, Tuesday next week, probably. Yeah, like I probably wouldn't want to trade. Like I'm realistically trying to find like any excuse I can to not trade those days. Um, More than anything, it's not necessarily like because the role itself is particularly scary or that I can't manage the spread of the contracts or something like that. I don't care. It's more that you just get a lot of forced buying and selling. And so if I'm using short-term momentum changes to drive a lot of my like thesis or a lot of my confirmation, I'm just set up to get a lot of false signals basically during the roll period because you get a lot of forced buying and selling, right? So, yeah, like that would be that would really be it. So it's just like I know I'm more likely to get a lot of false signals in the futures roll. So I'm like, maybe it's not worth it more than anything else. Um, but I say that I think I've taken one futures roll off in the last 2 years. So I don't know if it really actually changes that much. I think it's easy to get tilted on a roll day and to get really stuck, like kind of in the same way that it's really easy to get like feel like you're chasing price action on an FOMC day. I don't really trade FOMC ever either because I'm generally done before the announcement ever drops. So it's avoiding conditions, right, that trigger that high dopamine or that, anxiety or stress. If you can get rid of those moments, you're generally going to make more money long term, even if in the short term it feels weird to not place a trade. So my last question, what news slash podcast do you pay attention to? And how do you use the info for your trading day? All right. So I listened to London is Blue, the Philly Eagles podcast, Birds 24/7, Pardon My Take, pretty much nothing on trading related, truth be told. I'm a big audiobook guy when it comes to like trading content. I love the Market Wizard series. I'll listen to a variety of audiobooks on there, like pretty much anything by Mark Douglas. I'll listen to. Um, yeah, honestly, most of the trading podcasts I found that exist out there suck. They're yeah, they're promoting the wrong people or like people that I just don't have respect for. So I don't really pay too much attention to them. In general, like I don't really pay attention to the news. I would say that I'm a very much like alternative news guy. Um, uh, so yeah, like I don't know. I'm not sure if I want to reveal my sources too much, but like I'm more likely to watch combat footage than I am to watch a news report, for example. Um, yeah, like I've watched 60% of the war on the Ukraine. Yeah, I don't know if I really pay attention to news. I don't certainly don't really pay attention to it during the trading day. I honestly don't care. I trade price action and it yeah, sometimes things are going to happen, sometimes things will happen in your favor, sometimes they'll stop out. It should happen, so live with that variance. Yeah, I don't know if I do anything besides that. Like I'm kind of a believer that news comes out to support the path of least resistance. So if you find the path of least resistance, then the news will just add fire to whatever narrative you're in. So if you get a good entry on the right trend, news will just push you in your direction. And then if you're like chasing based on a headline, you're probably late anyway. So I'm probably not worth it. Yeah, look, I think there's nothing wrong with trading small on rollover weeks. Um, yeah, like I wouldn't worry about that too much. I think there's a benefit though sometimes in just having that full break. Like one of the weird things about trading is that it is really fun, so it's really easy to keep working and keep trading, and next thing you know, it's been like 6 months and you don't realize how burnt out you are. So I think like finding these moments to yeah, like take a natural break a little bit. Like we would take that in any other job in the world, but for some reason in trading it feels foreign. So just fighting against that, I think, is a yeah, fighting against that mental burnout, I think, is a really important thing. It's something that I probably don't take seriously enough, and it's something that takes a pretty tremendous toll on you if you don't manage it appropriately, and it just sneaks up on you. So the more proactive you can be, generally, the better. So yeah, David, when you see me show up to the stream each morning, that's the first time I'm seeing markets that day. I haven't read any news. I haven't looked at what the markets have done overnight. Yeah, like exactly what you guys see me do first thing in the morning is the first thing I'm doing when I'm looking at the trading day. For me, right, on a day-to-day basis, I'm just trying to follow my system as much as possible. So I have a pre-market prep system, do that every single day. I have a trading system, I do that every single day. The whole point of that is that the variance, right? Surviving that variance is really important. And if I'm consistent in my executions and in my actions, then I can pinpoint the variables that are breaking and what I need to fix or change, right? So it just speeds up my learning curve effectively. If each day I've got a different process and I'm looking at different variables and I'm mixing up a million things, the point or the pattern at which my trading breaks becomes different each time. And I might find a pattern. I might just see some variance. And that becomes really challenging where you just end up getting stuck in a loop where you're fixing things that might not be broken. And then you're turning something that's fixed into something that's broken that might be fixed, but then something else down the line breaks. And so you just get into a situation where it's really hard to fix and repair. So I'm not trying to be some market savant. I'm good at my job because I'm consistent in my process and my cheat code is basically my consistency because it allows me to notice patterns or things that aren't working faster than if I was kind of doing things differently each time. What are my thoughts on using buy stop or sell stop for an aggressive entry? I mean, I don't use that personally. If you can prove that it works for you and that you can get a better entry price that way, sweet. You know, with your entry execution, there is no right or wrong answer, right? The whole point of it is, are you getting in when you think you're getting in, right? So is your technique matching basically the execution of your thought to trigger on the or finger on the trigger, right? So it's what allows you to get a fill when you think you're going to get a fill. I like to set my limit price and then wait for price to be better than that and click submit, basically turning it into a market order with a ceiling. But everyone has something that works for them. And so it's not one of those things that there's like an objectively best or worst. Um, I would say objectively worst is the things maybe that generate more slippage for you. But if you find that that gives you asymmetric upside in your entries, absolutely no problems. All right, let's stack up a few more questions here, guys. Maybe like 10 minutes left. I'm guessing you don't subscribe to a Squawk or anything like that. I don't, Michael. Even at the hedge fund I worked at, we didn't have a Squawk service there. We had Bloomberg terminals and things would flash, but honestly, we didn't really pay attention to those too much either. Um, yeah, I don't know. Stay in your lane is kind of my belief with trading. Like I'm such a small Yeah, I'm such a small member in this ecosystem that like I don't want to get in the way of sharks and whales, right? And they have such an information advantage versus me that I would rather rely on what my advantage is as a retail trader, which is my ability to get in and out of trades when I want, basically how I want, right? So big funds, they have to spend 5, 6, 7 hours building into a position. I can spend 5 milliseconds, right, to get my entry. That's my biggest advantage. That's my biggest edge compared to those guys. And so I want to focus on the techniques or the skills that help me exaggerate that edge, not chase after someone else's. Any other questions here? What do we got? How does one scale up their account from trading one contract? Love this question. So I'm a big believer in gamifying basically your risk tolerance increasing. So this is a moment where you want to like basically reverse engineer your objectives. So this is an easy example. If I was a trader who was making $10,000 a month, what would I be doing? Right? Like ask yourself that question. So if I'm thinking that through out loud, it'd be like, okay, well, I'm probably really good with my risk management. I probably have like one or two prop firm accounts. Um, I'm probably good at not giving away PNL on my winning trades. I'm probably not revenge trading. I probably have like what my setup is and ignore everything else. Probably journaling. I'm probably tracking. I'm probably studying. Like I would list out all those things that you can think of and then compare yourself to those behaviors, right? So then you're like, okay, well, now I'm a trader who's making 2K a month and I only do five out of the 10 things, right, that I listed out. So then your job, right, is to figure out what those other missing ingredients are and to track that for each trading day. So maybe you come up with the conclusion that you're missing, okay, like I don't close as my P&L is increasing, or I revenge trade, or I panic close my winners, or whatever it might be. Then each trading day, you list down those, three, four, five, a million things. Hopefully, not that many. Keep the list focused. And at the end of the day, you give yourself a scorecard, right? Um, did I succumb to any of those bad habits that I'm missing to become that 10K a month trader or whatever the number is? If you did all those things that the 10K a month trader would do, check mark, tick, you've done a good job. Repeat that for the entirety of the week. If on Friday, you'll look at your scorecards from Monday, Tuesday, Wednesday, Thursday, and Friday, and it's like A plus. You did it 90% of your trades or better, right? Maybe you had a little slip up here or there. You hit that cigarette in the bathroom when no one was watching, right? Whatever it might be, fine. But you've proven to yourself that you can improve your habits or improve your skills. And now you've earned the right to increase your position sizing. So then that becomes the catalyst to go from one contracts to two. If, say, you got like 60%, right? You're a C minus student on those objectives that you identified. Tough luck, brother. You're sticking to one contract. You didn't earn the right to scale up. So earn the right to increase your position sizing by reverse engineering what your objective is and seeing what's missing in your trading. Sounds good, Joseph. Enjoy, man. Makes me laugh every time. Any other questions, team? All right, so I have a question from email here. I'll answer while we're waiting. So this is a question from Peter. Peter, hopefully you're still watching. Um, And yeah, well, let's get after it. So your question, in your confirmation techniques document, you talk about confirmation coming after the setup candles, sometimes even one or two candles after the setup. However, in the included diagram, you point to the setup candle and the confirmation candle as being one and the same. I've also noticed that during the trading sessions, they're often one and the same. So I'm curious, how can I tell when a setup candle also acts as a confirmation candle, and when are they two different candles? So yeah, your question makes 100% sense. 100%. Lost my YouTube here. Sorry. So let's define what a setup is, right? So a setup is price breaking through a level. Confirmation is breaking, holding, and closing. So I'm just going to draw it out because so let's pretend that this blue line is my opening range high. So my setup, right, is a breakout above the opening range. My confirmation occurs once this candle closes and holds above the opening range. So from like a semantics perspective, right? This if the opening range here is opening range high is 897.75, the setup technically triggers the first time we see 897, right? Or that one tick above whatever that price is, or 898 or whatever it is, right? So our setup becomes active the second we cross that line. That's going to happen in between, right? A candle opening and closing. So, maybe the candle opened 30 seconds ago, but when it pierces through that setup point, right? It's still got, I don't know, 45 seconds, 60 seconds, 90 seconds, 10 minutes, whatever it might be before that candle closes. So on the 2-minute time frame, I know I'm waiting till at least, right, realistically, at least a minute and 59 seconds, but no longer, right, than that period prior to confirmation. So confirmation then occurs, right, when this candle breaks out above and closes above on that 2-min candle. So then, right, once that candle is closed, I can see if confirmation criteria has been satisfied. And the confirmation criteria, right, is strong candle shape. So we're getting a candle that's an arrow pointing up if we're bullish, right, or an arrow pointing down if we're bearish, and then that increasing outlier volume, and then holding right above our setup trigger point. The only time I will turn this into a 2 or 3 or 4 or 5 or 6 or 20 candle confirmation is if we get a breakout here, right? So let's say that it breaks out uh green vol, so it breaks out here, right? But it does so on on decreasing volume, right? So it doesn't give me the volume standard that I needed. What I'll then wait for is for the next candle to give me a breakout. And if that gives me the increasing outlier volume confirmation, I'll just visually pretend that this is one big candle and then look for an entry, right? Like at those highs. So if I get a setup that breaks, closes, and holds and is missing that volume criteria, I'll see if it happens on the next candle or the subsequent candle. And if it doesn't, right, or the move stalls out, no harm, no foul. So that's how I look at confirmation. Just understanding that a setup occurs when price action crosses through a level. Confirmation can only occur once that price has had an opportunity to break, close, and hold at or above that price or at or below that price if bearish. Any other questions here, team? What else is on the docket here? Anyone else got anything for me? Yeah, so electronic trading hours show like the overnight session, and that skews my volume calculation, right? So my volume bars or my volume moving average is based on the last 20 periods. But fundamentally, overnight, the volume is very, very light, right? You can see how limited the volume is versus what you see during the regular trading hours, right? The black versus like the shaded blue. So if I have the shaded blue, I get a lot of false readings on my increasing outlier volume because the previous 20, right, are like 1/10 of the average size of a regular trading day. So I set it to be regular trading hours so that I don't get basically any misprints from an outlier volume perspective. It keeps my data cleaner. I've been at this for an hour, so I'm going to give you guys final call for questions here. We're drying up a little bit, so maybe a natural end regardless. Well, let's do a final call for questions. And again, we'll be doing this every Tuesday and Thursday. Final call for questions. Got one. Uh, you guys want to stick around for an extra 2 minutes? I'll show you guys something cool. Sorry, it just takes a second to set this up. If you just make an account at dtrtrading.com, you'll get a 7 days free. Okay, one sec here, guys. Almost. Range. Maybe not. We'll have to do this another time then, guys. Sorry. I'm literally just I'm looking at literally a platform updating. So thing I want to show you guys won't be able to show you, but Hey, we'll get this up and running here pretty soon. Yeah, appreciate everyone taking the time to watch. Like I said, we'll do another one of these on Tuesday again. Next week should be Tuesdays and Thursdays. I think the time works pretty well for everybody. Appreciate you guys all watching. Again, this is all recorded and live, or will be available on my YouTube. And if you haven't subscribed already, help hopefully non-ridiculous trading influencer out a little bit and give me a subscription so we can get this to 10K as soon as possible. So have yourselves a great day, team, and we'll talk soon. Peace.